Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, October 24th, 2025. S&P 500 currently sitting at 6801. I'm David Zarling. I'm here with Ian McMillan.
6801?
6801.
I don't think you've ever had a number that high. Isn't it amazing what a week can do?
Yeah.
2 days, 3 days.
Another blue line on the chart, right? A new all-time high for the markets.
Another all-time high for S&P, for NASDAQ, I believe. For the Russell would be an all-time closing high for the Russell.
Mm-hmm.
And then, I assume the Dow as well. Yeah, look at that. Big, beautiful green candle.
Got to hold it through close today.
We do.
But it would be new all-time highs for Dow Jones. New all-time highs close for small caps, IWM. New all-time highs for S&P. New all-time highs for NASDAQ 100. New all-time highs for FTSE All World. New all-time highs for the Nikkei.
Yeah.
The new all-time.
That's a good one.
Yeah, I mean, there's plenty of, and that's how you get confirmation of trend, right? And I don't know that this could be the top. We never know that until afterwards.
Could be.
There's always going to be that one all-time high that's the last all-time high for a while. So is that today? I don't know, but we keep confirming. I can tell you that if you sold every single all-time high, you'd be in a world of hurt.
It would suck.
Would not be good. And we continue to see things that have led in the past be the leaders like semiconductors.
Dow Jones is at 47,000. I haven't even got my 40,000 hat. Haven't found it. I have a 20,000 hat, 30,000 fat. I got to get a 40,000 hat before we get to 50,000. Now I'm 2 hats behind. First world problems, man.
Yeah. I'm sorry.
I know.
I'm sorry that's happened to you.
Those are my people ask me what keeps you up at night. There you go.
Mm-hmm. Now, all those things being said, last week we highlighted probably not the best area to get involved in gold or gold miners. And Here we are a week later. And I don't want to sit here and make it sound like, oh yeah, we knew this was going to happen. It's just when you look at the interaction of supply demand on a chart, kind of looked like a level that was
like it was going to happen. It did happen. I mean, you got to wait for it to happen. As a trend follower, you got to wait for it to happen. Of course, they did it in a spectacular fashion. Down 4, 5, 6% in a day.
Well, and what'd you say, 5 or 6% in a day?
Yeah.
That's like a 4% for a Sigma move. That's not supposed to happen. That's supposed to happen 1 out of 240,000 years.
Yes.
How does that happen? How does that happen once out of 240,000 years? But yet we get something like that every year in the market. It's almost like the market is normally abnormal.
So we'll see. Gold miners, they're red on a day like today. I think that's over. There's so much. Again, you got to wait for price to confirm, but there was a lot of people. I would say the last wave, the things you started to see from in regards to investor sentiment all across the world, people going crazy for gold. Clients, not our clients, but I did hear a good story of a guy that had a big client, a bigger client that came in, and he put like a fifth of his portfolio in gold last week.
Yeah. And I need to correct what I said before. The 4 Sigma move wouldn't be 240,000 years, it'd be 240,000 days. So once every 650 years. A little bit off.
Years.
But still point made. markets are normally abnormal. It doesn't mean that the golden gold miner run is over. It just means that the opportunity of alpha opportunity.
Yeah. I think we've, at best to go sideways for a bit. I think that would be the healthiest. But yeah. Or maybe, I don't know. Maybe it just rips from here. I don't know.
Yeah, we don't know.
It's certainly been a good trend.
But I find it interesting that we're seeing some movement out of an area that I can't remember the last time we talked about this was steel on the podcast.
Yeah, steel's having another good day today, isn't it? Steel, pretty good relative chart. So you're back to like 12-year relative highs for steel.
Mm-hmm. Using SLX.
For 2013. So how about that? Maybe it's, I don't know. I'm sure there's a great macro case. Maybe we're bringing a lot of factories back to America. I have no idea. Maybe we're making more steel. I have no idea. But steel companies outperforming S&P.
Yeah, I mean, maybe
talked about them in the workbook.
Maybe it's metal kinesis. Maybe they're turning steel into gold.
Have you seen that diamond prices are plummeting?
Oh,
because of the lab grown. I read yesterday they said China had come up with a way to make gold in a lab. I don't know about that one.
Interesting.
But what if we look back and that was, would we get up to like 4,300 an ounce, 4,400 an ounce on gold? Yeah, 43.77 in US dollars.
Mm-hmm.
No, maybe we did get 4,400. Wouldn't that be it if we look back and that was the top?
Or is China just saying that so they can accumulate some?
Oh,
you never know, man. You never know when these guys get out there and start talking their book or talking stuff like this.
China's going to say that. We make our own.
We make our own viruses. Too soon?
Never too soon.
Never too soon. Speaking of China, international, what are we seeing? What are we seeing?
Kind of block. Yeah, there are some spots. I would say it's fallen off. I mean, not bad. It's keeping pace with the S&P over the last few months, like an EFA. EEM, I would say a little better. I think a little better. At least it's, from a relative behavior perspective, EEM looks much better. Now, from an absolute perspective, foreign developed it's already to its all-time highs. We got there back in like September on EFA, but then EEM, it does look on a relative basis, but on an absolute basis, now you're coming into this like 56 area.
Mm-hmm.
So got to keep that in mind.
Well, and
China's not doing it though. China's not.
Yeah, correct. That's what I find so interesting is you look at just look at EM versus EFA and emerging markets breaking out of a base on that relative chart. But then you look at FXI versus EM, and it's not China that's doing this.
China's definitely an underperformer for emerging markets. Whether you think it's emerging market or not, I don't know. Don't really care. That's the way the MSCI lists it. Not you personally, Dave. I do care if you feel that way.
Thanks. I appreciate your sensitivity.
But yeah, we're back in stocks. Your performers, right? I would still put growth over value for most categories or most market caps. However you want to splice that up.
I think one relationship you highlighted this week for the team that I think was very telling before even today was the high beta low vol relationship.
Yeah, high beta low vol held up really well, super well. A new all-time high yesterday, and then actually having a pretty solid day today. What do you think about micro caps?
Micro, the tiniest of hats, the ones that will not fit my head. They still got work to do. I like that on an absolute basis. It looks like we're going to get new all-time highs if we stick this going into the close. Very constructive for, right, if you think on the risk spectrum, micro caps carry more risk than even small caps, which carry more risk than your large caps or your mid caps. And then you look at it on a relative basis, if you look at IWC versus S&P, still plenty of work to do. I still think the middle of the loaf, mid caps, are fascinating to me that they have not made
Terrible. God, they're terrible. Why does no one own these?
Yeah, I don't.
Terrible on a relative basis.
Yeah, correct. And on an absolute basis, no new all-time highs. So I don't know if they're the Orphan Annies of the style box, but if you got micros, smalls, larges going out to new all-time highs, but sometimes for whatever reason, your SMIDs, your mids, yeah, it's very SMID of them to do that, to have your mid caps not make new all-time highs. Do you know that
we run a SMID ETF?
No.
I found that out this week.
No. Erroneous in all counts.
You might want to check that style box again, madam.
Yeah, speaking of large cap strategies, I should probably highlight the Adaptive Select ETF, which supports this podcast and is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. Almost made it through that without taking a breath, but then I got to this.
That was impressive.
And then had to take a breath. But we appreciate the support of ADP. Helps us get the word out to our listeners.
Momentum's kind of has a nice little show. Like if you look at broad momentum.
Yeah, what are you going to use for that? Are you going to use MTUM or are you going to use SPMO?
I use both.
Okay. Yeah, nice consolidation out of MTU.
Yeah, SPMO, and then on a relative basis, pretty solid. I mean, I'm biased.
Biased towards momentum. Yeah, biased towards momentum. I get it. So where are we in the investor psychology here?
Oh man, another little do you even remember? I was going to ask you this while you were doing the commercial from our great sponsor. Do you even remember why we sold off like 2 Fridays ago? Because I don't.
That was the newsy news.
Said China. It wasn't China.
Yeah, it was the China.
It was Chinese tariffs.
Yeah, it was Chinese tariffs.
Oh,
because China had done some export controls, and our fearless leader said he was upping the tariffs on certain products, and that was another tariff tantrum. And maybe that eventually does come to fruition.
Yeah. So where you asking where are we at in the
like investor? Are we euphoria? Like, are investors just in love with these all-time highs? Is that where we're at?
In love with all-time highs, man. I mean, how can you not?
We are. I know you and I love all-time highs, but are investors euphoric? And I'm using that because of the.
No, I don't think so. What is your baseline for euphoric? Like, so for me, I think of 2021, and I think about all the stuff going on in recently, like the yacht club. What were those things? The JPEGs.
Oh, yeah. NFTs,
and what was the real popular one? I can't believe I'm having a brain freeze here.
Was this were it the monkey ones or the apes? Or
something yacht club.
Ape yacht club?
Bored Ape Yacht Club.
Yeah. I think that was a measurement of euphoria. What innovative tech like using ARC was doing.
Yeah.
Just the really
blow off tops in stocks as well.
People live streaming, they're buying and selling out of NFTs. I think of them, more other euphoria would have been like your 2005, 2006 housing, where you check out of the grocery store and the checkout clerk would hand you their real estate license card.
I think we have whatever the opposite of that is. Well, we don't have 2009, but definitely no euphoria in housing.
Right. And I would say like the 2000s.com, where everybody and their mother had the latest stock tip on a .com that was coming. Now, so some might say, oh, we're in an AI bubble. I haven't, you know how you got some text on gold? I haven't gotten any, mom hasn't reached out to me about AI yet, AI stocks. My kids haven't reached out to me about AI stocks. I've had one client mention AI stocks.
What would be a top AI stock?
I'm thinking of like I guess
the quantum things.
Yeah, I would say like, I know semis are, people would throw that in the AI bucket.
Yeah, that's a good point.
So I guess you can make an argument there, but if we're just getting fresh, if semiconductors are going out at fresh 25-year highs on a relative basis, right? You look at a long-term chart of like SMH versus XLK, and we're just getting fresh 25-year highs. I don't know, but I think of like things like Rigetti, IonQ, qubits. I know that's quantum computing, and I guess I throw those in the same bucket.
Yeah, I can see that.
But I guess where I'm getting at is the old quote by, and I think it's a brilliant quote by Sir John Templeton, that bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. And so I'm always looking for, and it's very subjective, right, to say, oh, we're at euphoria.
Yeah, there's probably always pockets of euphoria at any time.
When the AAII survey comes out and we're back to majority bearish, and the fear and greed index is measuring borderline extreme fear, I think we're still at skepticism. I think there's, we got magazine covers out there by The Economist that are definitely not euphoria. Out here.
I think one of our 2026 goals is to get a part of the AAII survey. We got to fix this.
Yeah, where's our phone call?
I think we got to just contact them and say, put me on the list.
Yeah. And like the cover of The Economist, most recent one is the coming debt emergency, with a picture of a guy wearing a life vest that's basically choking his face in a big pile of water coming at him. It doesn't strike me as optimism or euphoria.
Wait, who did this? The Economist?
The Economist. So between the surveys, the fear greed index, just anecdotal information around me, this is not what euphoria feels like. Maybe optimism, maybe I could see that, but it almost feels like skepticism.
Yeah.
And then you throw in
a lot of bricks in the wall of worry.
And then you throw in the fact that October is notoriously volatile. Many times it turns out to be a great buying opportunity. And did we just have that again? And now we're heading into the best 6-month period out of a 12-month period, November through April. Now, admittedly, the second year after an election, so 2026, is notoriously choppy. So we still could get that. And maybe we're not out of the woods. Maybe this is the big fake out. Maybe this is today going out at all-time highs is the big fake out. I don't know. But it sure doesn't feel like euphoria and optimism to me out there.
I would agree with that.
What else? What else would you like to highlight for our astute listeners before we close this one down?
Bitcoin, I would say the crypto is still a little weak.
Yeah, I think it's interesting
Bitcoin's it's pretty far off its highs. It's down at 108 and it's 200-day moving average for the last probably the last week, bumbling around. I don't know. Yeah, I mean, definitely hard to own on a relative basis. Actually got worse this week, kind of breaking out of relative range. Yeah, I think it's at least for Bitcoin. I'm sure someone can go find a crypto somewhere that's outperforming. I would put Ethereum in that. Ethereum looks better on a relative basis, but I mean, Ethereum below, 4,400, and then shorter term, I'd say like 4,100. These highs from last December, looks like maybe another leg down there. If I had to guess. So stocks, I don't know. What do you think about rates? I mean, TLT has been.
Yeah, TLT, TLT is still in a range that goes back to summer of 2023. To be determined. I mean, that means rates are in the same category. Do we, rates are below a 200-day moving average. Nothing good happens below there. Do we get further rate reduction? I don't know. KRE, regional banks are responding to a 200-day moving average positively so far. We had seen some deterioration of financials overall. They still have a lot of work to do. So that red flag is still out there. I think it's productive that junk bonds on an absolute basis have had 2 positive weeks and are trying to make an attempt at new 18-month highs, 1-year highs. Need that to stick. We still have the dollar in a range. So it's not like all the red flags just disappeared. I'll be interested to see if we get a bullish percent that flips to X's after today, to be determined. Do we get credit spreads to continue to cool off? That would be helpful, but we'll see. Anything else before I ask our listeners to share us and give us a high ranking on their platform of choice?
I don't. I am just, we got to wrap this up, and then we get to our annual all-employee compliance meeting.
Yes.
Sick. That's going to be rad.
Yep, had that one circled on the calendar.
No, I don't have anything else. Remaining in an uptrend. Market continues to laugh at your worries. Not your worries, Dave, but,
Yeah, no, the market, we had a client presentation last week and just reminded them that the market knows more than me, knows more than you. And some people can't handle that. Some people can't handle submitting themselves and all their arrogance and of their opinions. After all, there's only correct opinions, right? And people really struggle with that the market might know more than them, and it's actually looking out 6 to 18 months. And that's what I'm here to remind people of today, is that the market knows more than you, me, everyone listening. It's its own thing. And right now, a new all-time high is confirmed uptrend. Could be the last all-time high. I think that's a lesser likely scenario, considering the breadth deterioration leading to this beforehand, that if we get breadth expansion, it could only accelerate for the last 2 months of the year. But again, we have to wait for the data to come in. But appreciate you doing this again with me, Ian. If you're listening to this and you find it valuable, please do share it. Please do give us a high ranking on your platform of choice. We really appreciate it.
Have a great weekend, everyone.